Good morning, everybody. Welcome to Sweet Spot Safari. Today we're going to introduce Luke Morris, who's a senior corporate partner at a regional accounting firm. We're going to let him introduce himself in a minute, but really today's topic is called Numbers and Nonsense. And the thinking behind that was really, one, are there patterns? Are there no patterns? We've always talked about patterns and polarities on this particular podcast, but also really, is the data that we're acquiring serving us? Is there more that we need to do with it? Is there less, etc.? And we think it's a very valid topic because it can play out both in life at the moment. We're handling more and more data, but also in business as well. So hopefully that makes sense to everybody. We'll follow our usual sort of process of open discussions and dialogue. So without further ado, I'd like to introduce Luke Morris. Over to you.
John, Ben, thank you very much for having me. You asked me to give a bit of background about myself. I actually studied physics at university, so numbers and data was there from a very early age. And I was getting myself channeled into almost doing a PhD. And I suppose at the age of 21, 22, I was terrified about getting channeled into something so narrow and so specific, a really specific area of physics. And it was around that time I'd always kind of fancied learning about business and understanding how business worked. I didn't know anything about business. So I kind of fell into a career training as a chartered accountant. And that's kind of what I've done since. And I've spent a bit of time through that journey working overseas. Not long after I qualified professionally and I was without any sort of personal and family and mortgage ties and all the rest of it, I thought I'll get some overseas experience. And I went across to the Middle East, North Africa, and I worked that region of the world for 3 years. And around that time, it was interesting because it was just after that global credit crisis of 2007, and I found myself seconded to the Central Bank of Kuwait. And the purpose of that secondment was really to design a financial stability law and oversight process for them and work with a number of other consultants to do that. And that really got me into looking at how companies had failed and how companies needed to be restructured. And that kind of started my move from being a debits and credits accountant guy into more corporate finance, as we call it, transactional work. So what that means is, when businesses are doing something because there's a change of owner or change of shareholder, I tend to get involved in that. So we help people to buy things, to sell things, to value things, to raise money for things. And all of that involves analyzing a lot of data, analyzing a lot of numbers, and ultimately comes down to this decision-making thing. And I think that's what I like about what I do, because it's the analysis piece, it's the data, but it's also, I think our clients value having someone who will give them an opinion as well. And very often that decision is, will my return on my investment be greater than my cost of capital, and thus will I make a profit? And I suppose in a nutshell, that's what I do with clients.
Yeah, that's really interesting, isn't it? And it sounds as though that this secondment to the bank was a sort of seminal moment for you. And I think you've touched on a number of points there. And of course, you've talked about taking risk to a certain extent, financial risk, restructuring. But you've also, I think, highlighted the point of getting it right rather than getting it wrong, because the downside of getting it wrong could be huge when you're looking at a central bank. So just building on that a bit. So what are your experiences in terms of, in the wider context of people actually getting it right? Some examples of people getting it right with data, and people getting it wrong, and because what we want to try and explore a bit is a bit of, what are the impacts of getting it wrong, right? And how often also does it happen? Because I remember going to, funnily enough, an IOD meeting in London a few years back now, and this guy's sole business was spreadsheet checking, because what he found was that people always start off with Excel before they get into a proprietary system or do other work. Everybody starts with Excel. and basically he debugs them. He said he's been in situations where just getting a positive and negative sign right, or a simple arithmetic calculation wrong in a cell, can have massive impacts, in terms of loss of revenue or cost or anything else. So it'd be interesting to get some of your perspectives on that, Luke, just as an opener.
Yeah, it's a great question. And I there's a bit of an analogy with some of the work we do a lot of business valuation work for clients, and sometimes there's a real specific reason for that, which is sort of encoded in statute. We need to do a business valuation for a specific tax purpose. It might be you want to issue some shares to an employee or something like that, and that's pretty straightforward to do. It's when it's the non-tax purpose, it's when you get the client that comes to you and says, I just want to have an idea of what this is worth. Can you do a valuation? And clearly that's part of their decision-making process. And I always say to them, look, there's a real difference. You've got to understand that I can prepare you a formal valuation report that I would prepare to a forensic level of quality, and I'd be quite happy to be cross-examined on in a court of law. But that won't necessarily give you the right answer, because there is a difference between value and price. And I can tell you now that my valuation report, which will be rigorously prepared, will take into account essentially three variables. It will be looking at risk, it will be looking at earnings, and it will be looking at growth. But when it comes to the real world, you kind of have the additional grit in the oyster, which is emotion. And why are we doing this thing? What is the instinct behind the decision? So, to answer your question, how often do people get it right and get it wrong? I think, the easy bit is the analytical. And, of course, you might get errors in spreadsheets and so forth, but let's assume we don't do that. The bit that I'm always fascinated with, particularly with entrepreneurs, is that emotional bit around the decision making. And I would, I think there's something in 52%, 48%, isn't there? And there's something in provided you're able to make decisions and move on, as long as you on average you're getting more right than wrong, you're moving in the right direction. But it's really interesting, that instinctive piece that you see with clients, and you probably have seen this as well, John. Different sectors. Different types of industries, you get different kinds of instinctive decision making coming out, and I find that absolutely fascinating.
Yes, it is, isn't it? It's a bit like the Daniel Kahneman type 1 and the type 2 brain, isn't it? The instinct comes from the type 1 brain, which is a bit like the fight, like, or fright, or the inverse of that, where the type 2 brain that's the type 1 brain. The type 2 brain is the sort of analytical process side of it, as you say, with the emotion. It's really interesting what you say that, because one of the leads for that question is that there's a lot of information out there at the moment. People have talked about big data, which seems, again, now we seem to be moving away from big data. We've got AI coming on. We've also got fake news. We've got deep fake. There's so much going on in the wider world with data and information. And it's trying to navigate a path and make sense of all that information. I've read a book called Making the World Add Up, right, by Tim Harford, who actually used to write a bit in the Financial Times. And, he's come up with some very interesting hypotheses around how people got sucked into big data and got it wrong. And there's plenty of examples where people just didn't look at the data sets properly. And concerns now with pressure, particularly, and arguably in certain areas of academia, where people where they used to have a hypothesis, and then they get the data set and they check that the data set prove the hypothesis. There's so much pressure now. If it didn't match up before, what they would have done was change that hypothesis. Now people are so wedded to the hypothesis, they're looking at, for want of a better word, changing the data set. And recently, I don't know if you're familiar, I know you were at Cambridge, is that there was that professor at Cambridge who's just been accused of plagiarizing his students' essays. And in fact, the university have upheld the complaints from the students, haven't they? And they've been vindicated. So there's a lot of, there's a lot of activity in that area, in data and stuff like that. So trying to make sense of that. Is there a particular process that you guys go through, not just as accountants, but, as responsible and intellectual people, in terms of trying to make sense of all that information that you've got?
I think one of the things that that I've noticed, where it can go wrong and where data can mislead. It's kind of two things really. I think increasingly we're seeing a lot more modeling of data and thinking of not just what has happened and what I've observed, which I quite like. From my sort of physics training, it's all about experiments, and it's all about doing something, writing down the answers, making the observations, and then sort of testing the hypothesis. It seems now there's a lot more, particularly with big data, a lot of it's about modeling the future. And that, as you know, the problem with the future is that no one's been there; it's uncertain. So I think a lot more future stuff is coming into the whole data discussion. And I think the other thing, what I like is always trying to go back to first principles. I quite like absolute data as well. So in my world, if I pick up a set of financial statements, I mean, the first page I turn to is the cash flow statement, because either the pound has come into the business or it hasn't. That is absolute. So if I look at cash in or cash out, that is absolute data that I can make a decision with. If I look at profit or revenue, I know that a clever accountant somewhere will have applied estimate judgments and so forth, which is what they do, but it's not absolute. I might have different estimate judgments. So I think those two aspects of sort of future data playing more of a role in business and just wider life generally. I think it's really significant, isn't it? And a lot of what we see in the news is by such and such a year this is going to happen. It's really part of our zeitgeist, it feels. And I suppose I always encourage my team is to look for absolute data wherever they can and start from there, and start from those first principles and then build up from there.
It was interesting because I want to bring Ben in a minute, but what you were saying about the future, of course, and prediction and modeling and everything else, and of course the famous book by Nassim Taleb, Black Swan, of course, and I've read a number of his other books, and both so's Ben, things like Skin in the Game and Anti-Fragile, and Fooled by Randomness, which I think is just a wonderful title, how he's managing to break things down, and actually it's basic numbers that are actually convincing people that things are good, but not necessarily in the right way, i.e., or they've not had a connected impact, i.e., they start to believe that they're having a positive impact because the numbers are working. In reality, it's nothing to do with their impact at all. It's just that that's the way the numbers are playing out, And again, you mentioned the financial crash, so I think that's quite interesting. But Ben, have you any thoughts or reflections? Because there's a number of topics covered there.
Yeah, I'm interested in the historical and future piece because, I guess a lot of numbers and metrics and statistics which we have and which we face and interpret every day do tend to come from a historical perspective, and it's interesting. I wonder how many of your clients come 2019 to 2020 had any sort of forecast of a pandemic which would shut down the economy in 2020 for significant periods of time. And you might also include maybe things like the invention of the wheel or the emergence of AI. I dare say actually mathematical models probably can help us predict. And I think ultimately this is really about predictability. But actually, I'm just wondering, part of, and I'm probably weaving in a few things here, but humans are probably more capable of thinking about possibility, and actually just new things, invention, innovation, creativity, whereas mathematical models seem to be pushing us towards more predictability, more control, and I just wonder. And so there's the kind of, a question for you, and question which I quite often think is do we want a life which, basically where we know exactly what's going to happen when, so we can kind of predict and plan for it, or would we prefer a life full of surprises and, you know, serendipity and, you know, synchronicity? And I just wonder whether kind of mathematical models and more prediction is moving us more towards the former than the latter. So I guess what I'm trying to do is just try and understand what may be the limitations of more data and more future forecasting, and what sort of world that might bring us and how life might change.
Yeah, I mean, we have this very old-fashioned concept in accounting of you know, information should be relevant, but information should also be reliable. And you can see how those two principles conflict with each other. You know, so your boss says, "Can I have the sales forecast for the next 12 months?" Well, you know, if that's going to be 100% reliable, I'll give it to you in 12 months' time. By which point in time, it's not going to be relevant anymore. Yeah. So you have that conflict. So I think you know, from my profession, we've been seeking to sort of get both of those things, which is kind of impossible. In terms of the question of clients that are prepared for the spring of 2020, the answer is zero. Nobody was prepared for that. What was interesting about that whole experience is, in my world, was it forced businesses, even businesses that are very conservative and don't like to do anything really at all, it forced them to have to do things through no choice of their own. So that was quite interesting. I think in terms of modeling, I use mathematical models quite a bit, because quite often, you know, in our work, we might have a classic situation would be where we want to price an option to do something in the future. So I mean, an example might be, Ben, you know, I'd say, okay, I will give you the right to buy a share in this company for £1 in 5 years' time. Right. So that right has a value, but how on earth do you go about valuing what that right is? And there's a mathematical model that's typically used to do that, called the Black-Scholes model. But a big input into that model is 5 inputs, but the one that's most difficult and biggest is the input of volatility. So it comes down to some judgment. Now, you sort of described a dystopia there to me, where you're saying that data can sort of plan out, we can plan what all the decisions are going to be and what everybody's going to do and so forth, which kind of terrifies me a little bit. I love the idea of humanity. I love the idea of synchronicity. I love the idea of instinct and all of those sorts of things. I think the technology and the data is capable of making incredible predictions. However, I think there is an element of there's somebody behind that technology doing it for a certain reason, so it's somehow corrupted. I don't feel it's ever going to get it quite right, whilst it's got that human input.
It's really interesting you say that, Luke, because I was at a conference a few years back, funnily enough, at Cambridge. I think it was the Bennett Public Policy Institute, and they had Martha Lane Fox there, and a number of people in the IT industry and AI talking about cognitive bias in algorithms, for instance, particularly, you know, when we've got threats to some of the more, shall we say, extreme regimes around the world, who also are very good at developing code and algorithms and everything else. So I absolutely sort of purport to what you said. But it was also quite interesting as well, thinking about this whole business of machine learning and AI and what points are going to take over. You know, we love as humans. Perspective is very important. Nuance is very important. You know, synchronicity and serendipity is very important. But my understanding is now, and I'm not an IT specialist, but listening to some of the people who know a lot more about it than I do, is that the processing capability now of these supercomputers, quantum computers and AI is a report that they are way, way beyond, or potentially way beyond the average of human comprehension, right? And at the moment, the humans have that advantage about the nuance and the perspective and the emotions and everything else. And the question, sort of slightly off topic, is this tipping point. At what point will the machines, right, develop that sort of emotional element, for want of a better word, and nuanced perspective to the point where they could start taking over and determining what we do, you know.
Yeah, it's a good question, isn't it? I think what you're saying, John, is that, I don't know, the world population, 8 billion people, the computing power is there to model the decision making of 8 billion individuals subject to different environments. Presumably that is the case.
Yeah.
Which is kind of fascinating and scary in equal measure. I think the whole AI thing, you can imagine that when accountants talk about this, and I'd be interested in your views on this, because what accountants say is, where does the data go? I've got, I'm gonna ask my chat GPT, John has asked me a question, so John earns this and John wants to do that, give me the answer, chat GPT. My concern with my accountant hat on is, where's that data going and what's happening with it? And I think the answer is, well, that's going off to chat GPT or somewhere and being used to learn. And so that's one thing which I'm sure will be overcome. Another thing is, well, will John pay me for something? Because ethically, I have to say to him, by the way, John, I've used a machine to do this. How do you feel about this? Here's your bill. Don't know how you feel about that. And something else that fascinated me in a presentation I saw about AI was this principle of I don't know if you've come across this, but hallucinations. The AI hallucinates.
So no, this is news to me. Please explain. So
I think of giving you a good example, but I'll say where does Luke Morris work? And ChatGPT says Luke Morris is a chartered accountant in Birmingham. Now, I'm not in Birmingham, but the AI is absolutely persuaded that that is correct, and nobody can seem to determine where that hallucination has come from. I don't know enough about it, but I think that's really interesting. And I don't know if that gets into sort of emotion and instinct and all those very human factors, which I think are very important. I mean, the reason I'm here doing the job that I do now is because I've done my bit working with FTSE 100s and big companies, and it's far less reward. It's more remunerative. It's less rewarding than working with real people that you're having a meaningful input into their life, where you develop a personal relationship with them, where they're on the phone every 5 minutes because you're helping them through the biggest thing in their life at that time. That's the reward that I get out of it, and my team gets out of it. Now, I'm hoping that that'll be the last thing to be replaced, but I might be wrong. I don't know. I don't know.
Yeah, but it's
I think there's we're kind of setting up whatever we're doing in so many fields. We're setting up ourselves to fail against machines, it feels like, because and this comes back to the paradox. Do we actually fear machines, or do we fear that we've actually become more like machines? And I feel that actually the kind of the latter is the nub of it. And when it comes to data, I don't exactly know what the exact phrase is, but every 100 years ago, it took, I don't know, decades for human knowledge to double. Very soon, apparently, it's going to be doubling every couple of hours. And so the data and information and knowledge which we're accumulating through all of the different scientific, technological, all of the kind of data kind of processes in society, it kind of begs the question: humans don't do scale well, and so we can't process that sort of information and actually find patterns and understand it. So by default, we're going to have to outsource that sort of data processing, finding patterns, interpreting data to machines. And I think you touched on it, Luke. Those machines are programmed by people. Those machines are run by organizations. They're not open. We don't know how they work. And so we're in the process really of giving over, some of our what we do every day to machines. and we don't really know how to interpret this data, and we assume that also that more data is better. But actually, I'm wondering whether, in the same way that actually having no data is bad, but actually having too data, we can almost become, paralysis analysis. And actually, you can have too many inputs, too many columns, and actually that becomes less useful. So there's something about instinct, there's something about training where we actually, what's enough data? And maybe it's a question for you in your field. Actually, in a world of infinite data, how do you choose what to focus on? What's actually important, and when's enough?
That's a great question, which I will come back to in a moment. The point you made about humans, I mean, there is almost augmented technology, isn't there, for humans? I mean, that's happening now. I think sometimes, if you ever take a train journey anywhere now, and you look around, everybody's just attached to their phones, aren't they? And I thought the other day, are these phones tools of the human, or is the human a tool of the phone? And are they being led by the data that this machine is collecting, and so forth? The question about, one of the things that I've certainly developed over the years. Let's say you're thrown into a new situation. Maybe you're looking at a business for an investment decision or something like that. And I don't know how better way to describe it than this, which is you just get a nose for things. How can I explain that in a more precise or scientific way? I can't. I've always been someone that's pretty good at taking a shed load of information, schedules and files and reports and stuff, and being able to hone into the thing that's material or significant or a deal breaker or whatever. And I don't know why that is. I don't know.
And I think you point again. It's having a nose. It's gut instinct. It's intuition, and I think this is comes back to the system one, or type 1 and type 2 thinking, which John mentioned, is that quite often we demonize the quick thinking, the intuitions or instincts, but actually these can be trained. And actually, if you're in your field, if you're a doctor or you're an accountant, you can train your intuition in that field, because you're seeing examples of things day in, day out, and so subconsciously this having a know something is kind of part of your skill set. But if I was I'm not a doctor, and so actually if I just only relied on my type 1 thinking for all things medical, and then giving out advice to people, that wouldn't be something good. So actually there's always this interplay between the type 1 and type 2 thinking. It's not either or, it's actually both and actually I think you can refine both to work in harmony together. And so I think this kind of these cognitive biases and the different types of thinking, we need all of them at the table to understand data sets and understand the world, I think.
It's really interesting because based on just what you said, I want to expand a bit on the point about intuition you talked about again with Luke, but I want to also go back to the point about hallucination, which I find quite interesting, Luke, because just for a bit of fun, a few weeks ago I think it was actually not ChatGPT-4, I think it was the early incarnation, just to try it out so I could get I actually asked it a question, which was, what's the intrinsic value of a lawyer and what's the intrinsic value of an engineer? I didn't ask accountant, right? And it was quite interesting. I did the engineer first, I think, and it came up pretty good. It talked about process, structure, skill sets, and it was about 2 pages. And I did the same thing for a lawyer, and actually they were virtually identical. And I know, actually, ironically, although one's scientific and one deals with words, if you look at the processing side of things, actually the logic applied to the law and to engineering is actually quite similar, right? But I then decided to inquire a bit more, and I spoke to one of my directors in Cambridge, and he said, yeah, there is a future for AI, but at the moment it is a bit like a graduate with Google, right? And that's just what I was thinking about your concept of hallucination, because what my understanding of what it does at the moment, although it's got access to all the databases, it's still fundamentally lazy, right? Because what it does is it looks for a solution, right, first, and when it thinks it's got the solution, it will present the solution, right? Doesn't necessarily do the cross-checking. And again, I'm no expert on it, and that might be one of the reasons why this concept of hallucination happened. Is it came up with it connected Luke Morris accountant, right? But it didn't go beyond Luke Morris accountants in Birmingham, for instance, as an example. But then that sort of leads into this whole point about intuition, which Ben was alluding to around this, which I think is important. Is the tipping point going to be when the system starts to get developing intuition, and maybe it's doing that now rather than just data processing? Because I think that's going to be quite interesting. And you know, it will almost get to a point as well, I'm wondering whether the sheer volume of data will almost prevent us developing the intuition, if that what I mean, is because our intuition, as you've described, like the nose, right? You know, I have that in engineering. I can walk onto a site and you can feel when things are not right or wrong. You know that based on experience and data, and you pull all that information together. But it gets to a point where there is so much data around there, it's almost impossible for our intuition to work or function properly. Does that make sense? You know,
Yeah.
And I don't know whether we're going to get there, but I think it's a question, you know.
Oh, I don't know if machines will get intuition. I mean, obviously they've got immense processing power. Or where we use it in our business, not in my part of the business, but the principle of data analytics is very much part of corporate auditing now. So you'll go to a client, you will take a year's worth of tens of thousands of transactions. And you will plug it into a piece of software that will do data analytics and spit out lots of interesting reports. You know, John was posting odd journals at midnight. You need to look at that. All sorts of anomalies and things like that, which is very useful as a tool for if you're an auditor of a company. So that's already being used. And I guess the other example is we've seen it in medicine, haven't we, as well, in terms of the ability to learn. I think was it in and around skin cancers? I saw it looking at different types of images from skin and this sort of thing, and very quickly ascertain whether there's a problem or not, because it's just got banks and banks of data that it can use in that way. So at the moment it's kind of a workhorse, but will it make that step to actually the intuition bit at the end? And I don't know. But that's the interesting question, because then you're throwing in all kinds of more questions of conscience, or maybe there's a spiritual element to all of this. You're getting very deep with that stuff, aren't you?
Yeah, exactly.
And one of the points you were going to talk about today was you know, how should data decision making be, how should you go about it? You know, should we be looking at sort of hard KPIs and return on investment for shareholders? Should we be looking at values and purpose? Now increasingly, you put the news on and everyone's talking about values and purpose. I'm sorry, but I'm a bit old school, because values and purpose is in the eye of the beholder.
Exactly. Yeah.
So whereas, again, back to my absolute data earlier, pounds or pence per pound on my dividend each year, I understand that's absolute. And if you're doing shareholder, and so I think there are some reasons, and sorry to be a bit cynical, and I don't know if we're going to be on the same page with this, but with some of the values and purpose stuff, particularly in business, I feel it's a neat way that corporate executives have found to avoid accountability.
I would agree. There's an element of that. I've around the world, I've seen all sorts of value statements, mission statements, vision statements around that, and a lot of them just don't really hold good. But I think the point you really make is that it's a relative term, isn't it? Values and purpose. And I know in some of the organizations I've worked in where we're trying to get a better alignment or improvement culture, the challenge is always trying to get the values and the purpose of the organization to match the individuals. And the truth is you'll never get a perfect match. It's impossible. The question is, if you look at ethics, for instance, I'm sure you'll see loads of ethics violations, or potential ones in companies in line of work that you're in, expenses for all this sort of stuff. It's not about getting a perfect match. It's about getting a clear set of values and principles for the organization as an operating model, right? Which makes it work and to be seen as a responsible business in the business environment, but making sure you've got acceptable minimum standards and that everybody in the organization is holding themselves to that acceptable minimum standards, because you'll never get around that. And I think you're right. I mean, I know, having worked in the process safety in the health and safety sector for a spell at corporate level, there was all this issue of corporate responsibility, of course, and corporate culpability versus individual culpability. How do you really hold a corporation responsible apart from fining them, right? Or putting them out of business, one or the other, And I remember early in my career, when I moved from a very sophisticated business, corporate business, to a subdivision of that business that was an acquisition, and it was nowhere near like that. And I remember the engineering manager came down to see me from the big site to the site I was as engineering manager, and he said, "Remember, John, at the end of the day," he said, "corporation's never going to go to jail on your behalf," right? Yeah. And I know that's a slight move, but again, it does bring in this whole business about not just numbers, but data, because data forms are really data's rules, data's regulations, its systems and everything else. And we use data, to make assessments. So, if you look at recent instances, the 737 MAX failure, with the Boeing and all that, that was down to cognitive bias. It was down to emotions overriding problems, deliberate misinterpretation, accidental misinterpretation of data, deliberate misinterpretation. So the data and the numbers plays out everywhere. It's not just, in a purely numbers-based field. Sorry, I've probably been rambling a bit there. So,
no, it's interesting stuff.
Just a tangent. So we wouldn't be here. Modern society wouldn't be here without oil. And the term data is the new oil is a term which I hear thrown about quite a bit. It seems like the future civilization which we're working towards, data is going to be an intrinsic part of that. What's your view on that phrase, data is the new oil? Does that resonate? Is it just very, very different? What's your perspective?
Well, it's self-evident that data has value as an asset. And again, from my professional perspective, quite often I'll have conversations with clients about this. These will be assets that businesses will tend to generate themselves. So they won't be on their balance sheet. But if I take a company A that uses data well versus company B that doesn't, there's clearly a difference in value to them. And in simple terms, how could I consider that? Well, let's say I've got something, Ben, that allows me to track everything that you do and understand all of your buying decisions and so forth, and your preferences for orange juice over apple juice or whatever it might be. Then clearly, if I have that data, I can use that to my advantage and make more profit than the company that doesn't have that data. And so you look at that differential in profit between company A and company B, and that basically is a stream of income that company A has that company B doesn't have, and that can be capitalized and given a value. So yeah, absolutely, it does have a value, and it's something that it's driving the economy at the moment, isn't it? So
yeah, and I think it's a really good way to think about the power of with and without data, but then maybe kind of just playing forwards a generation. Obviously the use of oil is a divisive topic, now, with things like Just Stop Oil, but then at the same time also, granting licenses for new oil fields to be developed. Do we kind of run the risk in the future of data being something which we kind of go to war and divide society over? Is that just inevitable that data becomes the next resource that we all naturally compete over? Or is there another path forward where actually, I don't know, a different outcome is possible?
Well, I think a big part of it, or maybe the fearful part of it, is around control, isn't it? And obviously the one thing that probably affects my profession more than others is the whole system of money. The whole system of money is based on debt. If you look at debt, if all the debt was paid down, there'd be no money left. So once you get your head around the fact that actually that money is backed by government debt and government credibility, then you realise that could quite easily be replaced by something else, which might be data, or it might be sort of digital currencies. And the thing with digital currencies, and I think it's quite an interesting area, and it's interesting for my profession as well, because if you imagine a £10 note that had a kind of an accounting ledger on the back of it, showing where it's been through its entire life, then I mean that's effectively what the blockchain is doing, isn't it? So if every single transaction is recorded on a digital ledger somewhere, well, first of all, you don't need to audit anything because you've got absolute knowledge of where everything's been at all times, because it's there, so it's controlled in that regard. And then secondly, you or I, as the holder of those blockchain tokens, I can't go down the car boot sale and spend them on, a jar of honey, can I? There's an element of a party administering that can control, which is why you have, I think, the current thing going on at the moment with the debt levels being where they are, and potentially some sort of resetting of global money, and the argument between decentralized blockchains like Bitcoin and governments that want to centralize it because it provides them with control, and that is all predicated on data, all about data.
That's really interesting. I'm glad you raised that as well, because I was thinking, as you were talking there, Luke, based on Ben's question, is that if we look at other areas of society, we're talking about moving away, going to decentralization, moving away from a central energy system. We're looking at decentralization, like local wind farms, solar farms, micro nuclear reactors and all that, support that. But is it possible to generate an ecosystem around, you think about the old days of bartering, which was limited to how far you could travel, an ecosystem around data and money? Because at the end of the day, there's who owns the data, who controls that data, and can a community really control their own data? I heard a great expression a couple of years ago, which was said, if you don't own the data, you are the data, effectively. And it goes back to your point about control, etc. And I think it's going to be a really interesting philosophical discussion and conundrum to try and resolve, because I'm guessing the central banks, because I know the UK is looking at it, the US is definitely looking at it, China's definitely looking at it. Is it a question of who gets there first feels as though they've got more rights to control, for instance?
Yeah, I think that's right, and it has interesting consequences for retail banks as well, because it essentially renders them unnecessary. Because if you have a centrally issued currency and we've all got digital wallets on our phones or whatever, then there's no real need for anybody in the middle of that whole process, which is interesting.
Well, it's also interesting from an employment point of view. It's a bit like AI as well, isn't it? Because I know, the idea of a blockchain was predicated on this total transparency and decentralization, which in theory would eliminate steps in the process, not just in terms of banks, but also, I heard a story, if you wanted to go and buy a new car, you could do it on your phone. You go direct. You don't even need a dealer. You go direct to the factory, which then drives the robot that says, I want, a red Ford with, a spare wheel and this spec or whatever it is, and it cuts it out. So I think, we've touched on it in other parts. There's a huge societal issues around this, and potentially to the point where we're taking humans out of that process, well, out of the transactional process, but arguably out of the decision process as well. And then, I know Mr. Musk has been talking about universal income, for instance. We're going to get a situation where people are just not earning enough to survive through the regular processes and income, whereby we're going to have to provide universal income. And that then begs the whole question of, are we all going to sit in the Web3 world and entertain ourselves in Web3, because there's nothing else to do, because there's no retail shops or anything else. So it's a huge discussion, isn't it, around that?
And just makes me think then about GDP, because that's pretty much maybe the organizing principle or the goal which makes all of us do what we do day to day. And you probably know more than me, Luke, about this, but Kuznets came up with the idea of gross national products, the kind of monetizing and creating data about what countries produce. And I think it came during the Second World War. And then it was basically, rather than just seeing as a one-off wartime kind of accounting process or goal, it almost become embedded in kind of every institution, whether that was banking, democracy, whatever. Even going back to the 60s, Kennedy said actually it wasn't a very helpful metric for understanding the kind of wealth, health, happiness, and all other things of the society. We're nearly 100 years on, and we're still using GDP really as this kind of metric and goal to basically incentivize and organize people, businesses, institutions. And what you're talking about in the future with decentralized currencies and the blockchain, I wonder if that then changes, GDP as a kind of like really key metric, which we think about at the same time.
It ought to do, oughtn't it? But I don't think it will. It's quite interesting you raised GDP, because it really is at the nub of a lot of what we've been discussing. So what we talk about GDP, the UK, whatever it was last year, 2.2 trillion, something like that. And people ask, what is GDP? Well, it's a measure of income, the income of a country. Well, if you drill into technically how it's determined, how that 2.2 trillion is determined, it's not, because the way it's measured is based on expenditure. So that's how they do it. So for a start, it's getting back to my example earlier of absolute data.
Yeah,
I love the cash flow statement, because the cash is in or the cash is out. GDP, it's a measure of income, but it's not really income, because the way the 2.2 trillion is measured is looking at expenditure. And if you drill into the data, you'll see, well, 2/3 of that 2.2 trillion is consumer expenditure. About 20% is government expenditure, and then the rest is made up of other stuff, business expenditure, and so on and so forth. So for a kickoff, it's flawed. But why is it endured? Because it's something that can be just calculated each year and compared to the previous year, can't it? And to address your point, I suppose governments have felt over the years, well, GDP is kind of a measure of how wealthy people feel, so that's kind of an important thing for us to be tracking. But again, looking at that data and looking at something more meaningful, GDP per capita is a far more useful measure than GDP. And what I can see, if I look at it, GDP per capita well, GDP over the last 20 years has basically not moved. It's averaged 0.2% growth per year.
Mm.
And we'll talk about inflation in a minute, because that's another thing that's
Yeah.
I use the word fraudulent. We're not supposed to be divisive on this, are we? But the way it's measured is very questionable. The GDP, so 0.2 per year over the last 20 years, and in the fact the population has increased by 2 million in the UK. So keep that in mind. You've got to think of it in per capita terms when you're looking at data. Then we've got the whole inflation point, which is, I'm fairly old school with inflation, consider it. And maybe I've talked to John about this before. At all times and in all places, inflation is a monetary phenomenon. It's about the supply of money. And if you look at GDP as a percentage of government debt, or vice versa, that's around 100% now. So the level of debt is that same sort of 2.2 trillion. Pre-COVID, it was 75%. Pre-financial crisis, it was 25%. So you've seen over that last 15 years, the amount of money that's been printed. To my head, that is what had the inflationary impact.
Yeah.
And it may have been exacerbated by other things and global factors and so forth. But I think fundamentally that's what it's about. And so I think that the whole discussion about the future of money and where that's going is very germane, very relevant, because it's difficult to see how it has a long-term future, as I see it.
Yeah, and it's interesting you say that, Luke, because I've heard other observers say the same thing about how inflation is absolutely inexorably linked to the printing of money when you look at that way in terms of the debt. And then you can argue, of course, that the case is actually, and again, it's a bit like your GDP per capita, and we've increased by 2 million. It's actually people are getting poorer in real terms rather than wealthier, to me, even though the economy's growing. But if that's okay, I'd like to switch gears very slightly around numbers and education, because I think it's really important. There's a lot of being taught locally, certainly in the UK, and I'm sure it's across other parts of the world, about basically upgrading the education system to a point where people are talk about not just arithmetic and mathematics, but which were the watchwords, but actually financial processing, understanding, knowledge, how to understand what comes in and what goes out and what the impacts of that are, profit, revenue. And as you said, right at the start, absolute data being cash flow, it's money in versus money out, and very clear. I'd be interested to know what your views on that, particularly because I've heard a number of accounting firms now sort of relinquish the requirement for graduate entry now. They're moving a lot more to people who've got very strong numeracy skills, basic education skills, without the need to do a lot of analytics, let me say, or more complex stuff at university. And I'm not in any way, judging what, a college versus a university, they're different needs. And again, if you think about AI and all the data processing skills, do we need that level? But I'd be interested to know about, that, your views on that in education. And are there other things that you think from a conceptual point of view that's important that we should be teaching, our youth? One of mine, critical thinking skills and problem solving, which I don't think we do enough of, right? Because that's going to be important. But I'd like to get your perspective on that, Luke.
Yeah, I think I don't know why it's the case, but I think over the years it's felt that education has become more about programming people for office jobs rather than educating them to be critical thinkers and to question and use their own brains. But maybe that's me just becoming a bit of an old fart, and that happens to everybody. But that's how it feels a little bit. You're dead right on the apprentice route, and across not just accountancy practices but across professional services in the UK. There's a real bias now to taking school leavers and putting them through apprenticeship. I think to be fair, I think a lot's been done on that. They almost have parity with a sense as an option as a school leaver, for something to do. We've seen that in our business, and I think where they've got quite good is that they, as well as the sort of technical grounding, they've also built in aspects of, I hate the expression soft skills. There must be a better word, John, which you'll know. But
yeah, I'm the same. I also, it's far too generic, and
maybe life skills or whatever they are. But that is very much part of the apprentice programs that we have our younger people going through now. So I think they've really improved and stolen a march, and quite rightly, more people are being attracted to them. So that's a positive thing. And it's the best way of learning, I think. Once you get young people in the workplace and they're working alongside more experienced people, they're learning by osmosis. It's very powerful, certainly for the professions. Of course, universities still have a place. But what I always say to people when we talk to young people, and perhaps we had an open evening at one of our offices last night where we had some sort of sixth formers there to explore careers in our profession. I think university's right if you're driven by a human interest in a subject, and that should be the driver. If your desire is to want to be an accountant quickly, then it's probably not right for you. But if you're deeply passionate in understanding more about economics, then it is right. And very much the live question. They were the discussions we were having just yesterday evening.
Yeah, it's really interesting you're saying, about learning through osmosis, which again is fantastic, and it's the human side of it. It's quite interesting. I did hear a podcast the other day where, in fact, they were raising the fear that the data processing has got so advanced now and so capable, with AI, it's almost that we run the danger of humans checking out, right? In terms of not actually using their critical thinking skills, problem solving skills, and also to use the expression soft skills. Whereas why I think it's even more prevalent now that we should, and this is what they were advocating, we need to be pushing more of that towards the human element, right? So that we don't lose it, because the concern was use it or lose it, because of the power of AI and computer processing. So I think we're getting close to the time now. We've had some brilliant discussions. So we'd like to sort of finish on maybe some final reflections. But, one of the things is, where do you think the potential sweet spots could be, Luke? This whole business of, trying to make sense of numbers, and we've used the word, and it sounds a bit like a trite word, but numbers are nonsense. But really what nonsense means is basically a lack of understanding of the data that we've got in front of them, or a production of about lack of understanding. Where do you think, is there a sweet spot around education or something else, or understanding?
I always, whenever I'm faced with a challenge or something that's a mess or I don't understand, the sweet spot for me is always to try and get back to first principles and sort of absolute data, and start from there and then build back up. And I think whether that's something that served me really well over the years. I don't know. Again, I don't know where that comes from. I don't know if it's going back to my interest. My interest in science, as a young boy, really, and particularly in physics. And there's a great physicist called Richard Feynman who basically described the universe like a huge game of chess that's going on, and it's a very complicated game of chess, and we've got to use observations to try and figure out the rules and figure out the laws. And once you start figuring out laws, the rook can only move up and down, and the bishop can go diagonally. They become your first principles, and they're your tools in your bag to analyze more complicated problems. So that's the sweet spot. It's encouraging, and certainly I encourage people that I work with to always try and get back to the first principles of the absolute information, the absolute data. If you're given this business, in my world, this business has a gross profit margin of this and an adjusted earnings of that. So that's all fantastic. Now let's take that and let's get back to what the actual cash flows are and what the tangible assets are. That's it. But you can apply that to all aspects of society as well, can't you?
Yeah.
And I think that's where data can be misused, is when is sometimes when it's presented with a particular spin on it, and it's not given in its absolute purest sense.
Yeah, the beauty of that is that by going back to first principles, and I have to say, I absolutely agree with you, is it does two things. One, it provides a level of validation, which I think is what you were saying there. So to avoid this misinterpretation. But I think the other thing is it means it's education. So to me, the positive about that is in order for people to work to first principles, they need to be educated in first principles, right? So it sort of links back a bit to the question we had about, you know, the importance of critical thinking and processing and all those things in education. So I think that is a huge opportunity. So I think that's great. So Ben, any final thoughts and reflections on what we've heard today?
No, I've just really enjoyed the conversation. I think numbers are here to stay. Sort of statistics and data are only they're just going to become more and more prevalent. So I think we all need to just find ways to better understand them, but also using our kind of devil's advocate, understanding when things don't seem quite right, and it's easy to create stats. It takes a lot more effort to actually get to the bottom of them and actually understanding the real context behind them. So there was a few things which came up for me, Luke. I think the balancing information and relevance, point which you made, and about connecting past and future, and obviously past performance doesn't necessarily predict kind of any kind of future, as you see in T's and C's and any investment advice. There's the balancing the type 1 instinct, or finding or sensing your nose, but also the analysis piece as well, just to understand whether that instinct is correct. So balancing those, just understanding data, as well as the context, the narrative, the purpose behind it as well. So stats in isolation are okay, but actually there's a bigger piece that they represent. And then also the kind of the thing which we spoke quite at length about, which was how we will interface with machines, and machines will kind of be able to process huge amounts of data and find patterns, but we'll need human judgment to actually make sense and guide our choices. And so there's quite a lot of kind of patterns throughout that to guide our way through. So really appreciate it.
Yeah. Thank you for that, Ben, as well. And thank you for Luke as well. Really appreciated your input today. Really eye-opening, some very important insights, both, philosophically and also in the field of finance and accounting. And I think I heard a great expression, which I have used before, based on what you've just said, Ben and Luke, which is, past performance isn't a predictor of future greatness, which I think is really important certainly when we're looking at performance, but also when we're hiring people too as well. So that's great. So thank you again. That was our podcast on Numbers and Nonsense, number 18. We look forward to seeing you all again in the future. Hopefully our next one, number 19, will be on mind and matter, which will also be hopefully a very interesting topic with an interesting speaker as well. So thanks again, everybody.
Thank you. Thanks, Luke.
Yes.